Hello and good day to all friends. This is Mojtaba Rasti from the Thales team, and today is October 22nd, 2025. I'm here with you to analyze Bitcoin using the Thales Market Screener tool. Please note that these analyses are purely educational and informational. If you use them to take positions in the market, the responsibility for any profit or loss will be entirely yours. So, yesterday we expected an upward move. In fact, I think the price went much higher than this. It reclaimed this high, and it almost broke through this other high as well. It also showed signs of intending to reclaim this high, and then, with a news-driven excuse, we got the correction we were waiting for. It fell to around 106,600 or 500. Here you see a pattern similar to a descending wedge has formed, more or less, and it has now led to this candle that's moving upward. The zones you're seeing now are the ones drawn today. They've moved slightly downward, but overall, compared to yesterday's zones, there hasn't really been much change. Basically, the way the price is moving, you could almost ignore these ups and downs. If you remove them, it's as if these fluctuations in the market never happened. So, from where we are right now, you can see that the price seems to be trying to move upward again. If we switch to the daily chart, look, on the daily chart, after those 3 candles, the movement continued upward, and then it reversed downward. Now, today's candle actually has about 8 hours left. There are still a few hours left for it to close. If it closes like this, it can actually be interpreted as bullish. At the end of this candle, with this kind of long lower shadow and a shape similar to a hammer candle can actually make us expect a bullish move for the next day's candle. Now, let's look at the weekly chart. It's the same on the weekly chart. See, on the weekly chart, you also see bullish signs. On the weekly, after this candle and this one with bearish momentum in a red body, it ended with the candle you see now, which has a long upper shadow, and the body, for now, actually looks like a doji, but if the body moves a bit lower, it could form an inverted hammer, which again, this inverted hammer after 2 red candles could be a sign of a trend reversal. That is, when you see after 2 strong red candles that buyers are able to push the price up to this point, it shows the strength of the buyers and indicates a possible shift in traders' sentiment toward bullishness. These are the interpretations we can have from the curves, the chart, and the candles. Let's go to the market screener and see what the market screener tells us from the beginning of today up until now for the expiration date. Tomorrow, the 23rd of Maktab. On the 23rd of Maktab, 6,241 bitcoins have been traded in the form of 2,559 futures contracts, and we're seeing this kind of curve, which shows a bullish outlook. Looking upward, you can see here we have a profit peak at 112, then the curve dips into the loss area at 115, goes a bit into loss, and from there it breaks upward and enters profit again. If we turn on the delta, you'll also see that right now we're in a situation where we're fluctuating between selling calls and selling puts. If we move down from where we are now, we have put selling down to 101,000, meaning the floor is likely seen at 101,000. And upward, we have calls selling up to 114,000, which suggests a resistance is likely there. Naturally, we're a bit closer to 114,000. In fact, you can see we got very close to it once. It's a nearer target, and the price momentum is also somewhat bullish right now. We can still draw a bullish trend line at the bottom here, which is a point to note. So, on the upside, if we break 114,000 and 114,500, you'll see call contracts get activated here, and the price increase will be accompanied by an increase in delta up to 120,000, 119,000, 120,000, and the situation remains bullish. If we move the slide curve forward, this bullish situation almost holds. Lately, though, both sides are coming up, and it becomes volatile between 105,000 and 114,000. So, even for tomorrow, 105,000, which we've gotten very close to now with this shadow and bounced back, we can guess that maybe the price intends to head back toward 114,000 again. Let's go to the processed database. In the processed data, the bullish side is dominant. The bullish dominance is actually much stronger here. Again, if we move downward, down to 102,000, it's accompanied by put selling, meaning with a price decrease, we see an increase in delta, and the floor is seen at 102,000. We've seen the floor down to 106 and then bounced back up, so you could say there's a higher chance the price might move in that direction. We're seeing this in the processed data as well. It's bullish, and if it continues all the way to the end of the delta, it could go up to, say, 118. If we move the slide forward, the bearish outlook gets a bit stronger. Both sides of the curve are almost equal now, but we can still have a bullish outlook. There's not much negative open interest, though. Well, actually, why is that? Here, it increased. Let me set the open interest to 1. It doesn't really make much difference. You see, the curve conditions are still the same. The bearish leg has come up a bit, but the bullish outlook still seems to dominate. Let's go back to the raw database and move on to plotting the indicator and zones. So, you can see the intersection of the buyer and seller curves. At the top, the 110 and 800 contracts are in profit. At the bottom, the 105 and 150 contracts are at a loss. The upper zone is the agreement zone, and the lower zone is the disagreement zone. In the upper zone, the seller doesn't want the price to go above 111,220, while the buyer wants it above 110,500. So, this is where they expect the price to actually be seen, and you can interpret a bullish move from this situation. If we enter these numbers into the chart, which have already been entered before, you can see the prepared version here. You can see that this is our prediction point for tomorrow compared to yesterday. You see that the high and low still have a slight downward trend, but the momentum of this decline has decreased. The momentum of this drop has lessened. Still, based on what we see here, in our lower zone, there's a possibility of touching 105. There's a possibility of touching 105, and on the other hand, a move back toward 111. Now, you can also see the updated zones here, which are still pretty much around yesterday's zones. However, the upper zone is from about 110,300 to about 111,100. The lower zone is from 104,300 to about 105,500. And the middle zone is from 108 to 108,500. Right now, we're ranging in the middle zone, and we said a move to the upside is more likely because this area is in profit and is also the agreement zone. In the past hour, we've also been bearish. If you consider the trade entry times and count the candles, and go back about 18 hours, you'll reach these candles. Our two bearish candles were around here, where our intended trades entered. So, the downside has already happened, but our bullish outlook hasn't materialized yet. So, we can still expect a move to 110 and 111 again. Alright, that's it for the zones. Now, let me activate the contracts and let's move on. Let's look at delta and gamma to see what key points we have. We have two short gamma levels, and the stronger one is at 105,200. Look, 105,200 is right here in the zone. Actually, our lower level, which is for the maker, is a gamma long for the maker. Here, there's also a gamma short, and this gamma short comes from selling puts. It's from selling puts for the taker. And here, for the maker, it's buying puts. So, if the price moves in this direction and comes here, the market maker, if they're involved, has bought puts and their delta is negative. To hedge, if the price comes here, they need to buy to hedge the negative delta. This actually creates a supportive effect. Above, at 111,000 and 111,500, we have another gamma long for the maker. At 111,500, they've added again, which can pull the price toward itself. Here, the call seller is the taker, just like here, the taker is the call seller, and the maker here is actually the call buyer, and here. Delta is also a ratio used for hedging. Here, we sell to hedge, so we have resistance and support. Support at 105,500 and resistance at 111,500. We have two gammas, one above and one below, from buying. Here, it's call buying for the taker, and here, it's put buying for the taker. Our put buying at 96,000 is for the money, and our call buying at 117,500 is also for the money. Their size and intensity are almost equal. So, these are our key gamma points. If we want to analyze the movement, let's point out the important spots. There's an intersection here where delta meets the red curve at 117, another intersection where gamma meets delta at 114, and here, there's another intersection of the red curve with delta, which is almost equal to our gamma peak, around 117,500. And finally, there's this intersection at 121,220 on the lower side. Again, we have this gamma point we've already discussed. At 150,220, there's an intersection where gamma meets the red curve. The delta peak is at 100,800. Lower gamma is at 96,000, which we've also covered. These remain our key points at the upper and lower levels. Let me make this box smaller. Let's move on to Friday, October 24th. When you add October 24th, the trading volume goes up a lot. In fact, for 90 seconds, there's a strong upward bias, meaning, on the upper side of the curve, you can see that losses start to appear but with less intensity and a gentler slope, while on the lower side, losses come in much more sharply. The lowest point on the downside is about 106, nearly 157, and 8 cores. The peak profit is 109 and 200, with a ceiling of 113. 112 and 153 up to 113. If I reduce the trades for tomorrow's expiration, my chart still looks the same. it doesn't really change much for Friday. So, until Friday, it seems likely we'll have some fluctuations between 105 and 105 up to around 112. Well, we can expect this for Friday, and the intensity of put selling is clear here. You see, it looks like we're more likely to see a bottom forming for Friday, which could even go down to 102 or 103, more or less. So, that's our outlook for the end of the week. Let's move on to the detailed trades. For tomorrow, look, out of 6,241 Bitcoin. Let me clarify, 3,078 of them were bought. Out of this amount, about 1,882 are call buys. There were 1,195 bought, so clearly, call buys are higher, call buys are 700 more. Where is their target? Above 110 and 300, they see profits above 110 and 300. Here, all have a break. From 102, 300, it starts to profit, and from 114, 500, the profit entry gets a sharp slope. This point is important. As we said, if you check trades, you'll see it hasn't happened yet. In the past hour, we've been bearish, so this bullish outlook hasn't happened. Where did they want to buy puts? They wanted to profit from puts below 106,900, and with this shadow, we came down to 106,700, so that area was touched. So, it seems the bearish outlook has been realized. Sellers, we have 3,163 Bitcoin sold, with 1,783 call sales and 1,379 put sales. Again, the put sellers wanted to profit below 106,900, which has also been realized here. With the downward movement we've had, call sales haven't fully realized yet. Here too, levels above 110 and 100 haven't been targeted or realized. 110 and 100 match this upper zone of ours. Here, this is roughly the bottom of our upper zone, so the likelihood of a move toward the upper zone, toward 110 and 111, is higher. Call buyers are expecting an upward move, and on the other hand, call sellers are finding it tough to handle this bullish movement. That's why we might see some volatility in this area until Friday, maybe. All right. Let's go and take a look at the processed data for tomorrow, the processed database. So, if we add up 4,476 open interest, 3,799 Bitcoin, you can see the bias is toward the upside. Let's increase the size, 20 Bitcoin, still higher, 25 Bitcoin, 30 Bitcoin, all right. We can. We have many 25 Bitcoin trades, 50 in total, most are 25 Bitcoin each. As you can see, increasing traded Bitcoin volume makes the curve bullish. Above 110 and 111, it goes into profit, pauses in the profit zone, and from 114 and 100, it breaks upward. From the 14th, there's a sharp upward move. And well, let's take a look at the strategies. Even though 50 trades is a lot, we can't fit them all in our frame, but we'll try to look at all of them. The strategies we have, most of them are based on 25 Bitcoin trades. So, look, these are the two. A short strangle, 100 floor, 105 ceiling, 112. This one is also a strangle, adding it as well, again, 105 and 112. Let's see what this is. This one too, short strangle. No, this is a short strangle. So up to here, we have 150 Bitcoin in short strangles between 105 and 112. What strategy is this? Oh, this is an interesting strategy. It means a bearish spread with a width of 50 Bitcoin, 103 and 600, for tomorrow. So, they've targeted this lower level, 103 and 600. They've aimed for this lower level, and this gets added as well, making it 100 Bitcoin, and this one is 103. Alright, let's see what these two are. No, there's nothing here, so up to now, we have a bearish spread of 100 Bitcoin. The maximum profit for this spread is at 103, but that doesn't mean we'll reach 103. This strategy becomes profitable below 107. Its average profit is around 105 or 6, which matches what we saw. To reach maximum profit, it must go down to 103,800, and after that, the profit stays fixed. Alright, that's it for these spreads. Here, we have a 350 Bitcoin long strangle. It's profitable below 98,000 and above 114,600. We're leaning toward the upper side as the price trends upward, so 98,000 is a more distant target. We got close to 114. This is a neutral strategy. You can leave it and let it play out. Here again, it's a short strangle, floor at 103, ceiling at 112, and this one is the same so far. Look, it's a short strangle. This one as well. They're all short strangles. 200 Bitcoin are in a short strangle from 104 to 112, mostly within 90 seconds. Alright, let's see. Same, also a short strangle. Alright. And well, here, it's the same. So look, here they're all with that same 200. We can also check from 41 onward. Look, again, see, we've reached this side. It's a long strangle now. These opinions are very different. They want increased volatility. 4. Only those spread strategies we talked about, the bearish spread, are specifically targeting the downside, and look, this one also wants volatility for tomorrow, and so does this one. Same here, most strategies are for tomorrow. They want volatility, Here, if we take the position from 30 and above, you can see that from 30 Bitcoin and up, the volume of trades is quite significant. The result is that this is a long strangle, profits below 98, and here at 198, actually not 198 but 197, and on the other side, profits above 110. Right now, where are we close to? We're close to 110. The price is very close to 110 now, so the lower target is 1,295 Bitcoin, which is almost a long strangle. The big trades, which are actually for tomorrow, if we remove these two, I think the shape doesn't really change. For tomorrow, they're expecting increased volatility, and right now our price is here. You see, we're very close to entering profit from the profit side, so the likelihood of this happening is higher than the price dropping all the way to 97. It seems that the probability of attacking 110 and 511 is higher. Let's go and look at the liquidity. You can also see the liquidity in the 24-hour chart. Look, we clearly have higher liquidity above, up to 114, 115. Below, from 105,600 and 105,700, we have liquidity up to 107, which is about 157 here. Most of our liquidity has come up to 106,700. We've collected a significant portion of this liquidity above, but there's still some left. So, most likely, the tendency toward the upside could be our priority. Let's take a look at the 48-hour chart. Here, it's the same story. Liquidity clusters above are from 109 to 110,400, then at 111,200 to about 112,500, and here too, from 114 to 115. Liquidity is higher on the upside, so. Secondly, the range for tomorrow is this level that the zone has also identified, and it seems that until Friday, we'll be trying to retest the 114 high. That means we'll see fluctuations between 115 and around 112. But for the coming hours, for tomorrow, it looks like we can expect a move like this. We've just hit the lower end, and now we might attack 111 again, and probably move back down afterward. Maybe we can predict something like this for the price, and if this happens, you'll see that a kind of head and shoulders pattern will naturally form. That is, this one. So, after this up and down movement here, the second shoulder forms, and then if it comes down, it creates a head and shoulders pattern, which could then drop down to 103, the number we discussed in the analysis. We'll have to see. We need to see how strong this upward move can be and whether it can reclaim this level again. Thanks for your attention, and I hope this has been helpful.